EOS Why Crypto Volume 5. Yet another month has gone by in the world of cryptocurrency. Bitcoin continues to move sideways, and EOS and other cryptocurrencies continue to follow along with it. In terms of price, this month has been relatively quiet, but if you're anything like me, you've been paying attention to the larger market, particularly the US economy, and wondering when the Fed will pivot, and thus marked the return to easy money mode. After all, Elon Musk accused the Fed of massively amplifying the risk of a severe recession in 2023. If Elon Musk is correct, it appears that the US economy could have severe headwinds in our future, which could have a positive or negative effect on conjoining markets, including the current crypto market in general. In this video we will be going over a recent article I read by forbes.com called Recession Fears. Are we, unofficially, in a recession now? Okay, let's get started.
Disclaimer: crypto investments are highly speculative and involve significant risk of loss. Past performance is not necessarily indicative of future results. Always do your own research and invest wisely.
To summarize and paraphrase, the article first begins with, since about a year ago, experts have been saying that the United States is going to go into a recession, but since nothing official has been said, the dispute still goes on. Here's an update based on the most recent economic data to help you better understand where the economy is now and if a recession is still on the horizon. Recession definition: a recession is defined as a reduction in production across all main economic indices. For there to be an official call for a genuine recession, certain sectors of economic activity must be in a long-term decline. Even though the final monthly and quarterly numbers for these things are used to determine a recession, they don't always show how the economy is doing. When economic indicators continue to show signs of slowing, the National Bureau of Economic Research, NBER, declares a recession. Previously, the NBER would declare a recession after 2 consecutive quarters of negative GDP, gross domestic product. What is different this time is that other economic indicators remain strong throughout the downturn period. Finally, the NBER claims that there are no hard and fast rules governing the metrics used in its decision-making process. In other words, the NBER does not simply depend on 3 reports or the same collection of studies every time the economy suffers a downturn. It utilizes all of the information from the above signs and more to help it make decisions. Gross domestic product contracted by -1.6% in the first quarter and -0.6% in the second quarter of 2022, respectively. This metric is important because it gives us a full picture of the growth of the economy as a whole. High GDP means that the economy is growing quickly, and the Fed may try to slow it down by raising interest rates in order to keep inflation in check. The Fed is in a tough spot right now because GDP numbers show that the economy is weakening, but inflation is still high. In November 2022, the unemployment rate remained at 3.7%, remaining within the tight range of 3.5% to 3.7% it has been in since March of this year. In reality, the economy created 263,000 non-farm payroll jobs in November, keeping the unemployment rate stable despite the fact that many firms are laying off substantial numbers of employees. In order to slow down inflation and GDP growth, the Federal Reserve may try to slow down employment indirectly. The unemployment rate is important because companies lay off workers to cut costs and make more money. Slower company growth, in turn, reduces GDP growth since business production has decreased. According to the most current Bureau of Labor Statistics employment report, average hourly wages climbed by 0.6% over the previous month. Average hourly wages have grown by 5.1% year over year. Increased wage growth indicates that more money is entering the economy. The economy expands when customers have more money to spend. When wage growth slows, customers simply have less cash on hand to spend. What makes the present context distinctive is that, although salaries are rising, they are doing so at a slower rate than inflation. Current recessionary economic indications have yet to emerge. Despite a 2-quarter decline in GDP, the jobless rate remains low. This is true even though many companies have implemented hiring freezes or are laying off employees, possibly because the vast majority of those laid off quickly find new jobs. Work from home or hybrid office arrangements that result in lower or no commute expenses essentially provide the employee with a raise. Another aspect of the employment statistics is that millions of individuals quit the labor force during the epidemic and have yet to return. The epidemic and the retirement of a large number of baby boomers resulted in additional losses. Another aspect at work is the stimulus money given to individuals during the outbreak. People not only got money, but they also didn't have to pay their rent or student loans. This helped many of us save more. During the months of the epidemic, the personal savings rate, which had always been in the single digits, got close to 30%, which is about $2.3 trillion. This indicates that consumers are more likely to have the money to cope with today's increased costs, at least in the near term. In the end, we can say that many economists still think the US economy will go into a recession in 2023, but there are some signs that this might not happen. Commodity and fuel costs are also declining. Some everyday necessities are slowly going back to their prices before inflation, and the supply chain is getting back to normal. Despite merchant projections of a weak Christmas season, consumers are spending. We need to keep carefully looking at the latest economic data to find out when the economy will go into a recession and if it can be stopped. Just my opinion. Ever get the feeling that a lot of mainstream economic analysts are looking at the economy through rose-colored lenses? Seems to be that much of the unexpected positive economic data can be explained away by STEMI checks and lockdown rebound reactions. After all, many people were locked up for a severe amount of time that previous year, so it is only natural that they would want to overdo it in some areas of the economy. I suspect that Elon Musk is probably right, but ultimately only time will tell. Either way, protect yourself, buy alternative assets like crypto, lower your personal debt as much as possible, and live within your means. The year 2023 could be the start of a much more disruptive economic event that most of the professional mainstream analysts are unwilling to admit.
Thank you very much for watching. If you enjoyed, give us a thumbs up and subscribe. Also, if you would like to read, listen to, or watch more of this kind of content, please visit us at www.cryptoapologetics.com. See you next time. Take care.